Alrighty, what's going on, everybody? Let me know in the chat if you guys can hear me real quick. All right, cool. All right, let's get started. So it's a little bit of an audible today. Today is move-in day for my oldest daughter in school, so I'm taking a quick little break from moving her in on her college campus. So I was planning on doing this from my laptop, but not to cast blame. Apparently, my wife yesterday was using my laptop and forgot to put it on the charger. So it's got 6% battery. So I'm going to do this from my iPad. And yeah, if I miss something in the chat, just bear with me. I'll click over and look at the chat here in a second. So let's get started. It's a big week. If you haven't looked at the calendar, it is, especially for the US dollar, it's going to be very, 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 very important. And what I'm really alluding to is the symposium at Jackson Hole, which starts Thursday, August 22nd. That is really going to lay the foundation for what Jay Powell is going to be going into the preceding weeks, ultimately into the rate reduction cycle that I would say almost everyone at this point is anticipating from the September FOMC meeting. So, a quick little background on my position as far as fundamentals go. It is very much we have completed the tightening cycle as far as the US dollar goes. We are now just kind of, and we have been, right? We've been just sideways for the last year. We haven't had a increase in the rates as far as the Fed goes since July of last year. So we have been sideways. All right. From a monetary policy perspective, the Fed's position is obviously to get that inflationary rate down to a optimal percentage, which is the standard is 2%. Doesn't mean that if it gets to 2.3 that they are ultimately not going to stop whatever they're doing at that point. And obviously we're seeing evidence that especially over the last 4 months, we're seeing evidence of inflation continuing that downward trajectory. So inflationary numbers are extremely important. The labor numbers are extremely important because as far as labor goes, as the labor market starts to struggle, we're going to see a little more fuel to the fire for the Fed to augment that rate reduction cycle. All right. So everything that I'm reading, everything that I'm seeing, everything that I am preparing my personal trading for, it is with the anticipation that we will be entering a quantitative easing monetary policy cycle by the Federal Reserve. Now, why is that important? Because that ultimately is going to correlate with every other central bank in the world. What the Fed is ultimately going to be doing is going to send shockwaves throughout every other central market. And, ultimately that's where I want to take advantage of it. Everything from anticipating what the specifically what the dollar is going to be doing, but what everything else in general. If you're looking at investments, if you're looking to buy a house, right? I'll tell you right now that the next 60 days is probably your most opportune time to get into a long-term mortgage, right? And this is something I've spoken to people about already. If you just think about it, right? In the U.S., if you look at the housing market in the United States, home sales have kind of flatlined, right? They're sideways. What do you think is going to happen when the rates start to go down and it opens up for consumer spending, right? That means that there's going to be more demand in the market. If there's more demand in the market, that's going to equate to what? Higher prices. So from a home mortgage perspective, we're probably seeing the lowest pricing that you're going to see over the next 12, 24, 36 months. It's only going to go up from here. And you can always just refinance. That's my personal goal, right? Is I'm looking to potentially get another property and just refinance it in a year when the rates get down to a nominal side. But from the dollar perspective, yeah, I'm anticipating dovish dollar. I've been anticipating this. I want to say maybe around April, May is when I started to turn the table on my outlook for the dollar. It's when I started to look for opportunities to buy things like EU and GU. And quite honestly, it's worked out very, very nicely. Um, so that's kind of the background on where I'm looking with the dollar. The dollar is still going to remain king. Everything is going to react off of what the dollar is presenting. If we look going into the rest of the week, I'm really not interested in following anything outside of dollar news this week, especially with the symposium. All right. We have a lot of FOMC speakers that are going to be kind of giving their little tidbits. And especially the voting ones, that's what you really want to pay attention to. If you don't know how the FOMC is made up, I would definitely maybe get on YouTube, take a look at it. But there are quite a few members of the FOMC. There's only a small percentage of them that are voting members that actually cast their vote at the FOMC meeting on what direction monetary policy is going to be heading. All right. So what I'm personally going to be waiting for is I'm going to be waiting for Tuesday, 2 p.m. Eastern, when the meeting minutes are released. I'm personally, I honestly won't be spending a lot of time reading the minutes. I'm going to sit back and watch different views on what those meetings actually represented. So I'm going to watch and listen for the analysis of what some of these large firms that pay these guys six figures to really dive in and give their expert opinion on what the direction and what the thought process of the FOMC is going to be. We can anticipate that there's going to be a significant movement in the market that Wednesday afternoon. All right. So my game plan for this week is look for continuation moves on EU and GU to the upside. I'm also looking for some sell positions on US dollar, Swiss franc, right? Those are the three that I've really been kind of narrowing in on over the past, I would say, 60 days, is continuing to build a decent portfolio of entries to the upside on EU and GU, which I have been, and then continuing to look just for some more shorts on the US dollar, Swiss franc positions. When it comes to currencies, those are the ones I'm really, really just kind of focusing in on. Everything else outside of that, I'm not going to give a lot of time and a lot of effort to. Bear with me one second. Sorry, had a sneeze and I couldn't mute the damn thing. So, all right, sorry guys. Anyway, I'm really not going to be focusing a lot of the other currencies until we start to really get into the quantitative easing cycle on the US dollar. Once that happens, then I can start to understand the correlation between some of these other currencies. All right. If you haven't already done it, I would start taking a look at historical figures when it comes to some of these currencies and these central banks, just to have an idea of what their anticipated movement's going to be, right? The flip side of that is there's going to be a lot of unknowns, right? The biggest one for me is going to be the Bank of Japan. Traditionally, we can argue that with a dovish dollar, you would start to see strength coming into the Bank of Japan and the Japanese yen. I don't see that. I don't see that at all. I don't see, and really, if you follow anything coming out of the Bank of Japan, you're going to be pounding your head against a wall, because for me, I don't think they know what position they need to be in, and it is ultimately going to be very, very detrimental to anything that I'm personally going to be looking for if I try to guess what the Bank of Japan is going to do, right? So I'm just going to sit back. I'm going to wait for quantitative easing to, ultimately start, and kind of start to build the analysis based off of those reactions, right? I know exactly what I'm doing with EU. I know exactly what I'm doing with GU. I know what I'm doing with US dollar, Swiss franc. I know what I'm doing with US indices. Everything else is going to be up in the air, simply because I'm not 100% sure on the reaction that we're going to get and the correlation that we're going to have, right? And it's not as simple as, well, if this goes up, this goes down. It's really going to be from investors and banks diversifying. Where is the ideology going to be behind it, in which direction they're going to go on specific things? Perfect example, gold. Couldn't tell you what gold's going to do. I would assume gold is going to continue going higher. And the main reason is because it's going to be treated as a ultimate safe haven if the dollar is going to be coming back off of it. Now, in reality, if that's the case, then I can potentially see gold coming down, because there's not going to be a large safe haven demand if the Federal Reserve is starting to go into a quantitative easing cycle. So the question is going to be, is it going to be traded as a commodity? Is it going to be traded as a safe haven, right? Over the last, I'd say 4 years, it hasn't been traded as a safe haven. It's been traded as a commodity, just like every other good and service, which has appreciated because of the demand versus supply point. So that's why I'm not going to be really spending a lot of time with gold, right? Maybe if I start to understand a little more of where it's going to go and why it's going to do it, that'll kind of come into what I'm going to be looking for. But ultimately, I'm just going to be sitting back, waiting, and again, continuing to look for those bullish moves on EU and GU, and then ultimately trying to short US dollar Swiss franc. All right. So Wednesday is really just going to be the key data for me. Is going to be FOMC meetings. And then going to Thursday, we have inflationary numbers coming out of the ECB, right? The Eurozone is going to be presenting some decent inflationary numbers. We're going to see continuation on the backs of those FOMC meeting minutes, as well as flash PMI Thursday morning on New York, right? So really, this is why I'm focused on the dollar. This is why I'm going to be focused on indices this week. And ultimately, like I said, Thursday morning is going to be the start of the Jackson Hole Symposium. That's going to be very, very influential to the dollar. Obviously, anything that Jay Powell kind of leaks in those speeches going into Friday. So my game plan is to be positioned, preferably be positioned in Tuesday, Wednesday price action, and then kind of just let it just feed off of the news and fundamentals that come out Thursday and Friday. Just like last week, get into some decent positions, take some profits. Enjoy those profits, but allow for runners to just keep going. All right. So that's my game plan for the fundamentals. We'll jump over into some charts real quick. I'll take a look and kind of show you my game plan. Let's get over into Trading View. There we go. All right. All right, cool. All right, so we know the redistribution has ultimately, there we go. We know that the redistribution has ultimately played out. And this is something I talked about last week, where we are not seeing significant pullbacks on the dollar whatsoever, right? Dollar isn't really showing us the willingness to want to come back and mitigate. That's fine. Just play the continuation moves over, right? Last week, there wasn't a tremendous amount of I would say, I wouldn't, well, okay. Was there entries on something like EU and GU? Yeah. If you play the continuation reaccumulations, absolutely, right? If you play the buy stops, which is something I've implemented, yes. Did you get price on EU and GU to come into discount? Did you get the dollar to come into premium? The answer is no, you didn't. It's lagging. Yeah, it is what it is, man. I'm working off of my laptop in the middle of a thunderstorm, so it is what it is. If anything, just watch the video later tonight. Okay, so on the dollar, this is where I'm ultimately anticipating, right? I am going to be looking to see if price can ultimately walk its way back up into this price action, right? I'd like to see us spend some time here this week, and I'd like to end up somewhere on Wednesday here. Okay, this is where I'd like to see us come back into. All right, if price can work itself back into here, this is going to be the ideal scenario for me to play that. Again, I do not want to position myself in on something where it's going to be a waste of time and effort, price just kind of coming back and taking me out. So Wednesday's price action, potentially even going into tomorrow's price action, if we can come back in and mitigate the most recent redistribution, this is where I'm going to be looking to then target and make new lows. All right, that's going to be the dollar. And on the dollar side, how does that really translate over to what we're seeing on EU? And on EU, very much similar, right? What I'm going to be looking for is I want to see, does price ultimately, let's see. Bear with me 1 second. All right. So what am I going to be looking for? The very similar thing, right? I'd like to see if we can come back down and mitigate last week's price action. If we can see price do that, this is where I'd want to get price to come back in and make a new high. I think, realistically, could we still come back? Can we sweep out all of this here? Can we come back lower down into this area here? We can. But unless there's something that's going to get fundamentally price to come down there, I don't see that happening. In reality, what I see price doing is simply just coming back right in here. I want to see it come back into last Thursday's price action. Okay. If you go back and look at some of the lower time frame stuff, you'll be able to see that price actually gave there we go. So you can come back and you can take a look. There was a opportunity for a buy stop simply out of this small little price action down in here. Yeah, so price did give an opportunity out of the accumulation here that came into 50% of the previous New York price action, right? You did have an opportunity to take a buy stop simply right out of here. Obviously, if you wanted to offset it, I probably would have offset it off the 80 in here, and that would have been my stop loss. So there was an opportunity for the buy stop. We definitely have the descending wedge accumulation. If you looked, you had some divergence on the on relative strength. So there was an opportunity last week out of Thursday's price action to take the buy. There was also a reaccumulation that you could have taken simply off of, wow, for the love, man. There we go. How many drives is that accumulation? 4. Yeah, man, 4. Okay, so and then you had an opportunity right here out of reaccumulations where you could see that price ultimately distributed. We got the shakeout. We broke the high. Price comes right back in, fills you. I personally didn't get filled. My broker didn't hit me on the 80, even though I gave it a little extra. So I did not get filled off of this, but it gave a reaccumulation with a accumulation in the bottom. Right. So there was also divergence in there. You can take it off the second time frame. So those were both the positions, Thursday and Friday positions that you could have taken on EU. And very quickly, like I said, what I'm personally going to be waiting for is price to just come back and mitigate that Thursday sell-off. I'm sorry, the sell-off from retail sales, right? That's going to be what I'm going to be looking for. And if price can come back in here into this Thursday price action, this is what I'd like to see. I'd like us to come back and mitigate here. Ideally, again, I want to see it maybe Tuesday, London, or Wednesday, right? That's what I want to see. I'd like to see us come back and mitigate this. All right. So on the EU front, that's what I'm going to be looking for. You can ultimately see that this was already from Thursday's price action. You're already 100 plus pips at current price. So, any of those entries, I easily would have already taken 50% volume off simply because of where we are going into, Jackson Hole and the potential for us to kind of shake out some weak-handed buyers. All right. So again, I'm looking for those buys on EU. I'm going to be specifically looking at price coming back into Thursday's sell-off from retail sales, or I at least want us to cause some kind of manipulation and then play the continuation move. So if we get something like over here and we end up shaking out and then a new reaccumulation, that's going to be my next entry right here. All right. So that's going to be my game plan with EU. On GU, I'm going to be looking for the same exact thing, right? On GU, I'm going to be wanting to see if price can come back and ultimately mitigate ultimately mitigate. Wow, come on, there we go. Ultimately mitigate retail sales. So there was an opportunity, like I said, at the buy stop. You could have taken the buy stop. The current buy stop would have been at, let's see, what would that buy stop be at? So you'd be at a 1 to 10 from Thursday's price action off that buy stop. All right. So bigger picture, like I said, do I anticipate price coming back and mitigating down here? I do not. I don't think we're going to get a 300 plus pip sell off. If anything, I feel that price could ultimately come down into this area here. This is where I want to see the accumulation. So then target new highs. All right. That's going to be how I'm going to be looking to play this. Again, if we don't get that, if price does not allow me an opportunity to take it out of there, what I want to see is I'd like to see a distribution that kind of gives me a shakeout and then a reaccumulation. I'll take that reaccumulation. All right. Either way, if we end up playing the reaccumulation, it's going to take a little bit longer. If we get the pullback, like I said, I'd like to see that Tuesday, Wednesday entry come back into that area. All right. So that's going to be GU for me. And the other one that I'm going to really be paying attention to is US dollar Swiss franc. Again, looking for the shorts. I am very much interested in trying to capitalize on taking shorts out of US dollar Swiss franc. You can see that we are in a decent redistribution right here. There we go. So you can see that we are in a decent distribution right here. All right. I still feel like we might be able to go a little bit higher, but we've already broken order flow. This is looking like, especially with that low being taken right here in the last 12 hours. What I'd like to see is price just come back into that retail sales where we shook out a lot of the weak-handed sellers. I'd like to see if we can come back in here and get that distribution to then target a new low on US dollar Swiss franc. So I'm already holding a couple of these positions from higher price action from the previous weeks. I just want to start building on that. And like I said, the potential on US dollar Swiss franc is, again, to target the low sitting around like 83.80. And then I'd like to continue going down and looking at that 2015 low that we ultimately broke on some of the brokers, but we didn't break on futures. So I want to end up getting, that 800 to 900 pip move. I am holding, for the better part of almost like 600 pips now on USHEF. So I like where we are. The fundamental support is continuing to go lower. So for me, it's going to be, again, a pretty simple play. What I'd like to see is, do we come back into retail sales? Do we eventually, there we go. Okay. Do we eventually mitigate out of that with the new distribution, or do we play redistribution? So, again, if price can distribute up here, great. If not, I want to see the redistribution come back to mitigate to take a new low. All right. I'm not interested in trying to buy USHEF. For me, there makes no reason. There's no real valid reason for me to do that. All right. So US dollar Swiss franc, looking for the shorts, looking for buys on EU and GU. And then, of course, continuing to buy indices. I mean, there's really no reason for me not to want to continue the buys on indices. I've been saying it for a couple of weeks that I'm looking for the long-term holds. And yeah, I mean, we're very close to the 41,000 mark, which is what I was anticipating. The continuation moves on indices is probably the hardest thing to try to catch. For me, the buy stops have been working pretty nicely, especially on the reaccumulation sides. So what am I looking for going into this week? I'm looking for buy positions. There's really nothing I'm setting limits on. For me, the main thing I'm going to be looking for is going to be those continuation plays, and specifically in the time frame of New York Open, right? I want to see, does price offer me an opportunity to do something? I personally haven't looked this morning at any of the price action, and it really doesn't look like I would have taken anything out of this. There is a reaccumulation, obviously. You get that really nice Frankfurt sweep. You get price that ends up coming back. You get the SC that sits right in here, but there's really no mitigation out of that. So I don't really see an entry that I would have taken this morning. What I do ultimately think is that we potentially could get a larger shakeout. So if we come back into maybe like Friday's price action, that's going to be an area I'm going to be looking at. Yeah, I mean, ideally, and you could see like going back into Wednesday's price action down in here, you could see like the reaccumulation that I was looking at here. I personally didn't get into a US dollar or a US 30 buy. I got into a NASDAQ buy last week. I'm still holding some of those portions of those orders. What I am looking for, again, is continuation. I want all-time highs. So, you look back at this massive run. I mean, we're talking 2,200 points on US 30 from the low that we came into. So, ideally, I don't think, or I'm not anticipating huge pullbacks. For me, it's going to be, do we maybe get like a shakeout of this? If this is anywhere near New York Open and I see evidence of buyers, I'm taking an aggressive move off of that, and then I'm just going to target new highs. I'm not interested in trying to short it. Again, for me, shorting it is definitely a little more on the it's definitely going to be more on the aggressive side because of what's causing or fueling the US 30, pretty much indices across the board, what's fueling their drive to the upside. It's a culmination of those really robust retail sales from last week. It is the anticipation that we are going to be coming into the easing cycle, which is going to ultimately overcome the contraction in the economy ideology, right? It's going to be robust and behind the backs of expansion. When do you break even your aggressive entry? Buy or sell stops. When do I go to break even? I'll tell you right now, I typically don't. I just pay myself my risk. Yeah. For me, because ideally, I mean, my thought process from a buy stop or a sell stop is this is the in case entry. This is I want to participate in the trade. I know my bias is the reasoning for my bias is predominantly correct. And if price doesn't come back and mitigate, I'm not in a trade. So the buy stop or sell stop for me is the just in case trade. So I don't want to go to break even, because what happens if I get taken out at break even, but price doesn't come into my 50 or my 80 entry? So what I typically do is just pay myself my risk. If I risked $50 on that trade, and price is now at like a 1 to 5, 1 to 4, I'm going to pay the $50, leave the stop loss where it's at. If I'm still able to, based on price action, keep my 50 and 80 entry active, the game plan is I want them to stop me out. I want the 50 and 80 entry to activate. Oftentimes they never come back. So, my answer is, yeah, I typically, if I'm going to do anything, I will reduce my risk at the point where I no longer feel it's a viable option for price to come back to mitigate the 50 or 80. So I will reduce my risk is the only thing I'll do by moving my stop loss. But I would say that 9 times out of 10, the only thing I'm doing really in reality is paying myself what I risked on that trade, in the hopes that price actually takes that trade out and I'm able to activate off the, off of the 50 or 80 entry. And when do I delete the 50 and 80 limits? When it no longer fits into the market cycle. So if price is accumulated and the anticipation is that the reaccumulation is going to trigger my mitigation, my 50 and 80 entry, great. If we've just reaccumulated, now I need to wait for that accumulation to hold the market cycle, meaning I need us to break the down cycle of the market. And so typically what will happen is the reaccumulation happens and I'm not triggered. I will delete the limits, but I keep it in my position size calculator. So on my chart, all I have to do is my hotkey, which is shift in the letter A, and I can put those orders back in. Because what happens is, an example would be like, here, hold on. An example would be, and bear with me because this is going to suck for drawing. Let's say that, let's say that price does that, right? So, you have your distro up here, your redistro, and now price is accumulating here in a POI. Okay. So, this is the down cycle of the market. If price now, let's say I have my 50 and 80 entry here and price is distributing, the anticipation is that the shakeout mitigates and this is my entry to go higher, right? But what happens if that doesn't happen? What happens if price either takes off or the distribution happens here but never triggers me in and we actually reaccumulate? At that point, what I need to wait for is I need to wait for us to take out the down cycle of the market, because now this is my MC and this is my SC. So these limits can now go back on once we have a new leg. Now we're in the up cycle of the market, so I can put those limits back on. All right. So hopefully that makes sense. Have you done? Yep, I did already, man. Just watch the video, bro. Yeah, I'll post this this afternoon when I get back home. So, but yeah, that's going to be the game plan. So on U30, the aggressive entry is going to be reaccumulation. So I'm going to play the continuation move until price ultimately tells me no. We'll leave NASDAQ last. On SPX. So on SPX, you can see that we have created an all-time high. Oh, not yet, quite yet. We are 120 points, maybe 120 points from all-time highs. So I'm going to be looking for continuation moves. If you go back to last week, right, there was a really decent play on this previous Thursday's price action. I talked about it last week. So I'm still holding those positions. She's currently sitting around a 1 to 22. And if you go back into, again, the reaccumulation, right? The reaccumulation from last week is ultimately where price gave some really decent continuation moves. The buy stop on those, I would say as long as you can work in a good R to R, and for me, my R to R is a 1 to 5. If I can get a 1 to 5 on indices, I'm going to end up taking it. So, what would I like to see? I would like to see any kind of shakeout. So, if price just gives me the sweep, right? If price gives me the sweep and we come back into Friday's, New York session, this will be the area where I'm looking for buyers. I'm just looking for evidence of buyers coming in. If we don't see that, price is just going to continue to go higher, ideally. Right? There really wasn't anything that I took on SPX, but on NASDAQ is the one that I anticipated. I like the price action. Let's see. There we go. All right. So obviously, like I said, I'm holding the orders from back on the 8th. There was an entry here on just a continuation move. So you can take a look or just go down to 1 minute. So here's an example of the buy stop off the reaccumulation, right? Heart of New York, we get a decent little manipulation, right? We sweep out all the lows, we come back into the previous reaccumulation. So this is an example of just how I play my reaccumulations, right? You've got price that does that. That was from the 8th, all right? And then just continuing this up, we can come over and I'll show you Here we go. All right, so this was Friday's price action. This is how I ended up getting into these two positions. Um, Again, pretty clean. You get the accumulation that happens during New York, actual New York Open, and then on equities open, we get the nice manipulation. We get the reaccumulation. I was actually a little salty because my 80 entry never gets filled, so that's why it's only a 50. But I offset it 50 and 80. And then I ended up taking a mitigation of this price action right here off the 50. I had an entry on the 80 as well, but doesn't get filled. So I am holding both of those positions still. I ended up closing out 50% of it Friday afternoon once we came back up. And, where am I looking to take this bad boy right now? Let's just see. Let's go to the hour. Yeah, so I mean, the anticipation is all-time highs with Nasdaq, right? So the question is going to be, do we get something that maybe sweeps out, get buyers coming in to take this to the upside? That would be the ideal scenario, right? It's going to be just really, for me, the two things I'm looking at on indices. I'm looking at where's Asian. Asian is something that gets swept very, very, very often. And then what I'm going to be looking for is coming into the open. So 9:30 equities open for me Eastern time. I want to see what's building. Where are they reaching for? If we get a sweep to the downside, do I see evidence of buyers coming in? If I do, I'm taking it to the upside. And I'm just playing the short game. For right now, I'm taking significant volume off, and I'm just kind of letting small little runners go with the anticipation of FOMC next month. Once we get our first rate reduction and we start that QE phase, that's where I'll start to really kind of just start building more of those swing positions. But right now, I'm going to sit back and wait, because there's a lot that, at least for indices, there's a lot that's really fueling this. You not only do you have FOMC and the central bank, you also have US elections that are really on the backbone of this. And that is really going to fuel what the stock market, individual stocks are going to be doing. That's what's going to fuel what these indices are going to be doing. So that's something I'm going to be watching. Obviously I've said this, you get a pretty decent outlook from the specific indices based off of what those individual stocks are doing. So follow the sectors, right? Tech. The reason Nasdaq's been so bullish is tech is really, really driving a lot of this. So my suggestion is kind of just making. Have you ever tried making algo of this strategy? Yep. Yeah, bro. I got one. Yeah. So pay attention, watch what it does. I'm looking for continuation moves of it, and yeah, kind of go from there, man. But that's everything I've got. That's everything I kind of wanted to cover. And just in time because my AirPods just died. Anybody have any quick little questions? I apologize. I had to throw an audible. I kind of thought I'd be done moving my daughter in. Unfortunately, that wasn't the case. We got a lot of rain and then some key issues. So I spent most of the morning trying to track down some keys for her. Yeah, all good, all good. Cool. Well, listen, I will upload this video. And yeah, I'll catch everybody. If you guys have anything, hit me up in the chats. And yeah, you got a great one, man. Have a yeah, cool. Yeah, perfect. Well, listen, enjoy, and I will catch everybody later. You guys have a good one.